The small business regulation is a provision that can be incredibly exciting for many founders and many freelancers. Indeed, very exciting. However, it is also a regulation about which there are as many misconceptions and myths as probably about no other tax regulation. And because the small business regulation is fundamentally changing in 2025, I thought I would take this opportunity to create an entire video about the small business regulation. The most important thing to note is that the small business regulation is governed by value-added tax in Section 19. While knowing about Section 19 is nice, what is more important is the part about value-added tax. The small business regulation pertains exclusively to value-added tax. The small business regulation means that you do not have to display value-added tax on your invoices, nor do you have to submit value-added tax pre-declarations or value-added tax returns. The small business regulation has nothing to do with income tax, trade tax, or any other type of tax, nor with the obligation to maintain bookkeeping, etc. And the probably most common confusion of terms in the entire tax landscape of Germany is between the two terms small business owner and small business owner. The whole thing is often used synonymously, not only by freelancers, but unfortunately also by an incredibly large number of websites out there. This is fundamentally wrong. A small business owner is, in fact, a self-employment that claims 19 value-added tax and does not display any value-added tax. Small business refers more to regulations from the Commercial Code and describes business operators who are not registered in the commercial register, such as sole proprietors. The differences between the two terms are easiest and clearest when it comes to freelancers, as freelancers are, by definition, not small business owners, but they can still take advantage of the small business regulation. Therefore, please always be clear about the terminology in such details. Pay attention to the distinctions because otherwise you might receive an incorrect answer from the other party, whether it be regarding taxes or in the comments section. But let's move on to the criteria. Who is actually allowed to take advantage of this? You may take advantage of the small business regulation if you made less than 25,000 euros in revenue in the previous year and are making less than 100,000 euros in revenue in the current year. This means you look at every year you assess your revenues, and on January 1st of a year before you have made your first revenue, you look at the revenue from the previous year. And if you had a revenue of less than €25,000 in the previous year, you can use the small business regulation in the current year. Now, well, a few of you might perk up and say, wait a minute, I don't have a previous year. What do I do now? Then the revenue of $25,000 is for the founding year. If you make less than $25,000 in revenue this year, you can also use the small business regulation in the founding year. This small business regulation means you have no involvement with value-added tax, no display, no pre-declarations, and no returns. You simply have nothing to do with it. But there is a very central disadvantage. Namely, on the cost side, meaning your expenses, the invoices you receive from your service providers, suppliers, and so on, usually include value-added tax. And you cannot claim that back. Because if you do not submit value-added tax pre-declarations, you also have no way to reclaim the value-added tax you have paid from the tax office. However, it is standardly regulated in value-added tax that this is possible. If you are interested in the entire value-added tax system for freelancers in Germany, then take a look at the video in the top right. I once looked very closely at German value-added tax law in detail and explained all the fundamentals. And now you might be thinking, well, the small business regulation isn't that attractive anymore. And that is true. Especially for startups or for phases of self-employment where you are primarily investing, meaning you may initially have more expenses than income. The small business regulation is indeed financially less attractive in most cases. And then it can indeed make sense for you to waive this small business regulation. That is possible. This small business regulation is voluntary. You do not have to choose it. However, it is important to note that if you are below these revenue thresholds and consciously decide to pay value-added tax anyway, you are committing yourself for 5 years. This means you cannot switch back and forth every year as long as you remain under these thresholds. And a very common question that I also hear in this context is, who is actually allowed to take advantage of this? And there are no restrictions in that regard. So you can take advantage of the small business regulation as a freelancer, as a business owner, but also with a partnership, a UG, a GmbH, and so on. This means that it is not tied to a specific legal form, so all of you can take advantage of this small business regulation if you meet the revenue requirements, thereby saving time in bookkeeping. And that brings us to a purely practical question. What actually happens if you exceed these revenue thresholds. Specifically, we have the threshold for the previous year, meaning you must be below 25,000 euros in revenue. This is relatively logical. If you make over 25,000 euros in 1 year, for example, $30,000, then on January 1st of the following year, you look at your accounting and see, 30,000 euros in revenue, which means that as of January 1st of the corresponding year, I am no longer a small business owner. And then you start writing VAT on your invoices and submitting VAT pre-declarations. What about the second limit? You must stay under 25,000 euros last year and below 100,000 euros this year. And this has indeed changed in the year 2025. Specifically, everything that exceeds €100,000 is taxable. So you can invoice up to 100,000 euros as a small business owner in the current year, and any revenue that exceeds this €100,000, like in my example of 20,000 euros, you will have to display value-added tax. Once exceeding the threshold of 100,000 euros, you are no longer considered a small business owner. Then you must immediately display value-added tax. And of course, this means that you need to keep a daily overview of your bookkeeping because you need to know when you exceed that 100,000 euros. That's why I also recommend a bookkeeping program. This will always show you if you are above or below. Find recommendations in the video description. A few of you might now say, that sounds attractive. It might even sound more attractive than before. I want to do it. How do I do it? Well, if you are a founder, you fill out the tax registration questionnaire at the very beginning. And there is a field where you check a box, and this box indicates that I would like to take advantage of the small business regulation. This is basically the requirement for founders, but you can also do this later. You can apply for it informally. Informally means there is no form. This means a simple email, a letter, or in some cases, you might even make a call to the tax office and tell them, these are my revenues. I meet the two requirements and I would like to take advantage of the small business regulation in the future. This can only be done at the turn of the year. So, for example, you could contact the tax office at the beginning of 2025 and say, now I would like to be a small business owner. Then it applies from January 1st of this year. And if you are a small business owner, you actually don't have to do anything with the value-added tax. So you write, no value-added tax on your invoices. A small note for the invoices. You not only don't need to display value-added tax, but you also need to include a small note on your invoices. No value-added tax display per Section 19 of the Value-Added Tax Act. No value-added tax display by the Small Business Regulation. Something is not legally required, depending on how you phrase it. I'll write you sentences. In description, you can simply copy that. Include this on your invoices. Or your clients may claim the invoice is not proper and may not pay you. We want to avoid that. You don't need to make any value-added tax pre-declarations. No need to submit any value-added tax returns. And on the cost side, you also have no option to have the value-added taxes refunded to you by the tax office. With the electronic invoicing requirement, which will be gradually introduced between 2025 and 2028, there is a specific invoice format, and small businesses have a slight advantage here. In the future, invoices must be issued in the e-invoicing format. This means they must be either an XML invoice or a Zugpferd invoice. And if you do not receive an e-invoice or a specific type of invoice, you have no tax deduction. This is very unfavorable for self-employed individuals. For you as a small business owner, this e-invoicing can be completely irrelevant, as your invoices do not include value-added tax, and upon receiving the invoice, it can also be irrelevant to you, as you have no claim to value-added tax anyway. So you cannot get this value-added tax refunded. Therefore, you actually don't need to pay much attention in the future to whether you received an X invoice or a lead horse invoice during the invoice entry control, because the penalty you would face would be the missing input tax deduction, which you, as a small business owner, lack anyway. This means you can initially ignore the e-invoicing obligation. Of course, you should keep that in mind because your self-employment might grow at some point, but for here and now, you can actually disregard this whole electronic invoicing issue. And that brings us to a very central question. For whom is this small business regulation actually worthwhile? I had already mentioned that in some scenarios, it is actually financially more attractive to forego this small business regulation. This is the case if you have more expenses than income, as you will receive refunds of value-added tax amounts from the tax office. But for whom is the small business regulation actually a good solution? And it is very important to consider who is actually your customer. Because if you have businesses, then it doesn't matter to them at all whether you display value-added tax or not, because they can reclaim the value-added tax amounts that you charge them in their value-added tax pre-declaration from the tax office. However, if you have customers who are consumers, then that is of course a difference. Because when you don't have to charge value-added tax, your prices are simply lower. This way, you could either offer lower prices than the competition or charge the same prices as the competition. However, you will earn more from it. But if you want to pursue your self-employment as your main source of income, then honestly, hand on heart, 25,000 euros in revenue is not that much. Your profit will likely be even lower. And I strongly assume that you do not want to maintain your livelihood at this level for long. You can't really make a good living from it. That's why my personal opinion is that the small business regulation is particularly interesting if you are, firstly, self-employed on the side, and secondly, have consumers as clients. In this scenario, the small business regulation is a real simplification, a simplification for bureaucracy, not necessarily a financial simplification. And to conclude this video, I would like to address two particularities once more. One of them is a tax trap, which many small business owners are not really aware of. As a small business owner, you have nothing to do with value-added tax. However, there is a scenario in which you, as a small business owner, must pay value-added tax. This is always the case when you have a customer. You are a business that comes from another EU country. For example, you are advertising on platforms such as Google or Facebook or Instagram, that is, with Meta companies. Google and Meta have their European headquarters in Ireland and operate their European business from Ireland. And if, for example, I run ads on Instagram or YouTube, I pay money to an Irish company, and this scenario means reverse charge, which actually leads to the situation where I, as the customer, have to take care of the value-added tax. This means that I actually have to remit value-added tax in Germany. I don't care at all if I am definitely subject to value-added tax in Germany, because while I have to pay this value-added tax on the amounts I have paid to Google, I also have a right to deduct input tax at the same time. That means in the end, I calculate once plus 190 euros minus 190 euros, and then I pay that. So 0. As a small business owner, you do not have the right to deduct input tax. However, you still have to pay the value-added tax. This means that if you spend $1,000 on advertising on YouTube, you pay an extra 19% value-added tax to Germany, and you have no way to recover those 190 euros. I have already looked at this entire topic comprehensively in a separate video step by step and told you what you can do in each case. I'll link that for you in the top right. Here, it's very important to note that if you conduct business in the EU abroad, please be very careful, especially if you are a customer, because it can actually lead to taxes being incurred, even though you are not directly dealing with value-added tax. And now let's turn the whole situation around. You are the service provider, meaning the company, and you have a client from another EU country. If you have cases involving reverse charge value-added tax law, you have no worries because your revenues always fall under the tax exemption of the small business regulation. This means you do not have to deal with the topic of reverse charge, etc. But there are certain other scenarios where you make revenue internationally, and that was actually not so easy in the past. The nice thing is that starting in 2025, these small business regulations will be very, very similar across the EU. This means you can also take advantage of the small business regulations in other countries. At least if you made less than €100,000 in revenue in the previous year within the community area. This means that there is not only a German small business regulation, but also an Austrian, a Danish, a French one, and so on. And you can actually make sales in other countries without having to deal with how to handle value-added tax in those other countries. In fact, these issues occur quite frequently, for example in dropshipping and so on. This means that you can now also take advantage of small business regulations across the EU. It is important that you register for this. You will receive a small business identification number from the Federal Central Tax Office, and you will actually need to report your revenues quarterly. Explaining everything here goes a little beyond the scope of this video. If this is interesting to you, feel free to leave a comment under this video, and I will make a video specifically about international business as a small business owner. But if you have any other questions, feel free to leave a comment under this video with your questions, and I will be happy to help you. And if you are currently looking for accounting software to monitor your revenues, a business account, tax services, or whatever else, you will find all my recommendations below in the video description. It's also worth subscribing to this channel because if there are any legal changes regarding the small business regulation and so on, you'll be the first to know about it here. You can find my recommendations again here, and otherwise just check out another video on this channel. There is really much to discover. For example, this one or this one.